the Financial Survival Network. Now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. It's 119.22. Well, gold prices have gone up and up and up, but silver prices, have you watched silver? It's over, as we speak right now, $24 the ounce. If you're surprised about it, well, you shouldn't be. If you were a subscriber to Junior Miner Junkie, that's with a Y, you wouldn't be surprised at all, and you would have cashed in on it, but it's not too late. The proprietor, David Erfle, is here with us now. David, so what about these metals prices, eh?
Yeah, pretty insane. Nice to talk to you again, Kerry. Thanks again for having me on. The gold price has been waffling between 1750 and 1850. It appears as like an eternity. I mean, over nearly the past year, you've seen bull traps, you've seen bear traps, you've seen traders whipsawed, and all this time you're seeing juniors being thrown out the window with abandon. I mean, the more gold they prove up, it really doesn't matter. These people are using press releases to sell juniors until today. You know, today we've had this huge move, and it's something that I've been talking about for the past several weeks. Everybody's focused on the Fed. What's the Fed going to do? It looks like they're going to raise interest rates in March. It's 97% priced in now that the Fed is going to raise interest rates in March by the CME Fed Watch tool. And they're going to wrap up their bond buying program by the end of March and then start raising rates. As soon as the Fed began to talk hawkish back during the last Fed meeting and say that they would, hint that they were going to be doing these things, the gold price sold down to 1753 and reversed quickly intraday. And that was the higher low that it made. And ever since then, it's been making higher highs and higher lows. But you wouldn't think so when you look at the headlines of people becoming so bearish this sector, even though the gold price has averaged $1,800 an ounce last year. That's the highest yearly average in history. Sure, the gold price went down 3.5%, okay? But it went up double digits the 2 years before that. It was just consolidating this huge move. If you take a look at a monthly chart, it's just a little blip. Mm-hmm. And for some reason, the biggest reason is because the equities continued to go higher. Was people saying, why should I own these gold stocks? Because I'm making so much money on all my equities. These things are high risk. Gold's going nowhere. I'm going to sell them for tax loss. And that's exactly what happened last year. We had probably the worst tax loss selling event that I've ever seen in my 20 years in this sector. And I was just rubbing my hands together saying, thank you so much for all these gifts that you're giving me and my subscribers of these juniors that are, doing all the right things. They've raised the money at the right times. They're proving up lots of ounces, de-risking high margin projects in top tier jurisdictions, and yet they're being sold with abandon. So I'm gonna take this gift and say thank you very much. So I've been doing that ever since I believe the GDX and the GDXJ bottomed on the very last day of Q3. That's the last day of September of last year. I think that was the bottom. And so far, it's been tested during that Fed speak I was talking about last mid-December. And now we're seeing a huge move higher right now that is kind of coming out of nowhere for most people, but it's not really surprising to me.
Hey, David, let's look at go back to 2012, 2013. Look at that chart. It is a perfect cup with a handle. Yep. And what happens to the cup? It gets filled. That's what's going on here. Now, you and I both know mining company executives of the highest caliber, these juniors, people who've made their shareholders hundreds of millions, if not billions of dollars in the past. They have been the Maytag repairmen of the stock market. They're belittled, they're berated, they're called all sorts of pejorative, derogatory terms. People I know are completely honest that they don't even take a salary in half these companies. All they do is take stock, they own stock, they buy stock in the open market when it's available. And these guys have been pilloried. Well, maybe now they're going to get the last laugh, because that formation, that cup with a handle, is one of the most powerful technical indicators, patterns known to man.
Yes, and it is huge. I mean, the very, and also what makes it even more bullish is the top of the latest, the top of the cup was higher than the beginning of the cup back in 2011. We had the first phase of the secular gold bull market, which began at the turn of the century when gold went from 250 to 1925 an ounce in a little over in basically a decade. And then we had a 50% correction from that move down to 1050 an ounce. Well, the gold price literally doubled in 4 years from that 1050 low to 2100, to nearly 2100, 1045 to 2090 basically.
Yeah.
And ever since then, the handle's been being created from that cup. And while that handle's being created, we've been getting these gifts from the market of all these juniors. And like you said, if you get into the right ones, because basically, Kerry, let's face it, 85 to 90% of these juniors are worthless.
They're dog.
So you just got to make sure you got to get into the right ones, and you're holding for the long term in the right companies. That's very important. Sure, when the gold price has a solid $2,000 floor, which I think is going to be very soon here, then you're going to see the turkeys start to fly as well. But the companies that you want to hold for the long term are the ones that are ran by these honest guys that participate in each finance. They own stock, they own a lot of stock, and they're aligned with shareholders right along with you, and they raise money at the right times, and they have this is also very important, district scale size projects. Yes. In top tier jurisdictions with blue sky potential. That's what these majors are looking for right now. When back last year when Agnico took over Kirkland, and at that time I said this has a very good chance of marking a bottom in the sector, just like when Barrick took over Randgold marked a bottom in the sector. And it appears that may be true here, and because also you've seen M&A really start to pick up, but the M&A is picked up by majors picking up juniors, de-risking large single asset projects. So that's basically what I've been doing since October of last year. Is I've been accumulating I've been basically put my major hat on, my major CEO hat on, right? Like if I was a CEO of a major mining company, what would I be looking to accumulate right now? And that's what I've been accumulating, and that's what they've been accumulating. So my only worry basically, Kerry, is that these companies get taken over too soon before I get a huge payday in them, because that's what these companies have been doing. They've been buying them out relatively soon. Yeah.
Well, and you look at Great Bear, their recent acquisition, and
without a resource estimate, that was huge. That company, Great Bear, had not even had a resource estimate yet, and look how much Kinross paid for it.
And because the trend of the majors dipping into reserves, shrinking reserves, has to set them into a panic at some point.
Absolutely. And another major thing to point out here during these acquisitions are these guys have learned from their mistakes of a decade ago. A decade ago, we had gold price screaming higher. Everybody was saying gold's going to go over $2,000 an ounce. This is it. This is the golden age. It's going to keep going. And the CEOs of these companies bought into it and listened to their shareholders that were clamoring for more ounces, and ended up buying these low margin projects, these bulk tonnage, low margin, large projects that needed a higher gold price to be economic, and they paid for those sins. And now they've shored up their balance sheets. They're making lots of money now, and these deals are having, there's huge cash components to these deals. They're not being bought with shares like they were last time. So not only did they buy these low margin, projects, but they did it with their own shares. So it was hugely dilutive that they end up having to write down the projects. Well, they've learned from those past sins, and now the mining sector is the healthiest it's ever been. Yeah. And these guys are paying huge dividends. So this is what you look for. You look for these companies that are attractive to these guys that they're going to be buying out, because they got to replace these ounces now.
Yeah, and with the potential of near-term production, so therefore the single projects that are near past producing mines where they've gotten good grades are certainly going to go at a premium, and the scramble is going to be on. You know, one of the indicators way back when Newmont and Barrick consolidated their Nevada operations, that was kind of a signal to the market that this is what we do best. When it comes to getting ounces out of the ground from a proven resource that we can keep expanding, we're really good at that. When it comes to exploring and discovery, that's not our bag, and we can't jump in the arena too early or we keep getting burned. And all you have to do is look at the title chain on some of these projects, David, and you see like everybody has owned them, and they never go anywhere. Never go anywhere.
Well, yeah, I mean, it's like you mentioned, you know, it's a lot cheaper for them to buy ounces on Bay Street than it is to spend a lot of money exploring. You know, because these things right now, I mean, they're basically shopping right now. Well, these things are on fire sale. Even if they pay a 50% premium for something, it's still cheap at these prices.
All right.
So and also, if you take a look at what's going on in the share prices of these companies, these major miners, look at Newmont, for instance. Newmont now is the #1 gold miner. It's the largest, it's the most liquid, and what you're seeing is you're starting to see sector rotation coming in to these gold stocks. And that, if you take a look at Newmont, it's a huge tell. On the last day of September, like I said, that when I suspected that the sector had bottomed, you saw a big move down in the Nasdaq, which now, by the way, is down over 8% for the year, and you saw a big, huge white candle in Newmont with good volume, and that was the start of sector rotation, I believe. And if you take a look at the chart of Barrick, which used to be the #1 gold producer, now they're #2. They bottomed in September of 2007, in September of 2015, and then they bottomed 3 years later in September of 2018, and I believe they made a major bottom in September of 2021. Every 3 years. So I expect the next 3 years to be very good for our sector.
Hey, Newmont, and if you don't know this ticker, it's NEM, like Mary. They're paying a dividend here.
3.6%.
Yeah, 3.6%. Like you're getting rewarded to just wait for them to produce.
Exactly. Yeah. And these miners, basically they're trading at 5-6 times cash flow. You know, and S&P companies are playing at 15 to 20 times cash flow.
Mm-hmm.
And the gold price looks like to me is making a floor at $1,800 here. And all-in cost of production now there's been some inflation, of course, coming into these costs, and now it's $1,160 an ounce. That still leaves, you know, over $650 of margin of profit in an ounce of gold for these companies.
And we can only hope that they actually hedged their energy cost, because they were at like record lows 6-8 months ago. Hopefully
Yes, Barrick came out, and I think that they said their costs went down because last year, because they have huge copper credits too. They produce more copper this year. I mean, this past quarter than they did before.
It's up 8.25% today. It's over $20. And it is its dividend yield, adjusted for today's gain, is close to 2%. And you know, their production is, if they don't add reserves, it will trail off over time. But you know, over 10, 20 years, not over 2-3 years. Hey, let's just talk about the silver price. I want to get your
Certainly.
take on it. Again, another cup with a handle, but silver hit close to $50 way back in 2011, almost hit its all-time high, not quite, 48.58. So it never hit 49 and a half. It's the only commodity in 40 years to have not made a new all-time high. And again, cup with a handle, when you look at 2013, because it crashed, it peaked in 11, and then it went down and, broke $30 back in 13. So again, if you measure it from there, that cup with a handle is alive and well.
Yeah, silver, it's the beat up little brother of gold. Nobody wants to own silver recently. It's been bad mouth, it's been poo-pooed, and all the while it looks like it's made a double bottom at exactly 21.41. And the move today in gold was predetermined by the move yesterday in silver. We had a move in silver yesterday that was very, very important. We had the silver price go up over 50 cents, with gold down and the US dollar up huge, and the stock market tanking with risk off in the stock market. Usually you see those things, and silver has been tanking on all those reasons, and it went up sharply yesterday, and it was the tell of the move today. So if you but as far as silver is concerned, and silver stocks are concerned, there's just not that many silver juniors that I feel are worth investing in. So you really have to be careful with those.
I know it's dangerous territory, but
It is.
gains, the potential for gains. And some of them, like, I don't want to name names, look really good, and then they actually start producing, and maybe maybe they don't know what they're doing so well. But that's the problem. You can get those operational surprises where,
Yeah, I've got a few in my portfolio, but I concentrate on size. These companies that I have in my portfolio, they have these huge projects, and one is in the process of getting financed. Another one is in the feasibility stage, and I do have exposure to a couple of drill plays, but I have the exposure via warrants, which haven't been exercised. Because those are the ones you really have to be careful with. Are the silver drill plays?
oh my God.
When silver gets hot, everything starts running, and it's very important for you to take some profits off the table when that happens. Whenever you can get your original investment out of any of these juniors, and still have a large stake in the company, you try to do it. A lot of people learned that lesson in the last move last year.
For sure. Like silver, you take your profits when you get them. You don't wait around for your 10, 20, 100 baggers. At least get your money out and take a profit. Take money off the table with silver miners. That's the only way it's ever worked for me. When I sit around and think I've really got something, the market has a way of always bringing you to your knees and humbling you.
Absolutely, especially this sector.
Oh my God, this is the widowmaker sector, boy.
Yes, it is, but it could be very exciting, and it's funny. This year, we came into this year, the sentiment coming into this year was the exact opposite of the sentiment coming into last year. Coming into last year, I took a lot of profit off the table in the first few weeks of the year, and that turned out to be a pretty wise move. And this year, I've been doing the opposite. I've been accumulating stocks ever since October of last year, and I just purchased my last one this week. So I'm basically all in now. I have a little bit of cash to maybe add to a few other positions, but I really feel that the bottom is being created here. Once we saw the GDX and the GDXJ run up to resistance this morning. It's about 10:45. I haven't looked recently, but they ran up to resistance. GDX has strong resistance of 33. GDXJ has strong resistance at 43. But they had huge moves today. So if we see some follow through tomorrow, that would be very positive. But what I really want to see is a monthly close in gold
Yes.
above 1900, and that could very easily take place now. The monthly close, the month will end 2 days after Fed speak next week. And like I said, this hawkish rate hike rhetoric and winding up their asset purchases, it's 97% priced in now. I fully expect that this will be a buy the news event for the gold stocks. And basically that's what took place when they announced tapering. That was a buy the news event. And if you look at history during tightening cycles between 2015 and 2019, the Fed raised rates 9 times and gold prices rallied nearly 35%. And between 2004 and 2005, the Fed raised rates 17 times and gold prices rallied 70%. So the Fed now has got a job trying to tackle this inflation. They're behind the curve. Everybody knows it, and gold is starting to show you it knows it.
Yeah. Hey, just for listener edification, the GDX looking at 3261, and the GDXJ was 4267. I got a little delay, so that gives you an idea. But they're both up strongly, over 2% today, and like I could tell, there's certain tells in the market, David. The one tell to me is when you see a day where gold loses $20-$30, and then within 3 sessions thereafter, it's recouped all its losses and it's ahead. That's telling me that that it's got strength that the market isn't really comprehending.
Right. And also you see right now, silver is leading this move. Silver started to lead this move last week. And now SILJ, which is the highest risk ETF of the 4 ETFs, SILJ are the silver ETFs, GDX and GDXJ are the gold ETFs. SILJ is leading this move. It's up over 8% today, I believe. And it's already busted through resistance levels, while the GDX, GDXJ, and SIL are basically back testing their resistance levels. So when you see SILJ leading and SILJ leading the miners and silver leading gold, that's very positive for the sector going forward.
Now what we'd like to see ideally is the miners jump ahead and lead the metals, right?
Right. They've started to a little bit, but I don't think you're going to see that until the gold price now gets over 1900. I think that's when the juniors are really going to start to lead, and the miners are really going to start to lead gold.
Agreed.
They've got a lot of catching up to do.
Agreed.
They're basically trading. Before this move today, the GDXJ was trading. The last time it was trading consistently at this level, gold was at $1,500 an ounce.
Hey, and let's not forget, it's you have to watch the trend, the channel that gold was locked into here, and the fundamentals. But hey, a lot can still happen.
Oh, absolutely, yes. I mean, this could all reverse tomorrow, but
but it feels good right now.
Yeah, exactly. And if you take a look at the move that we had from the lockdown lows in the GDX and GDXJ, they soared. They went up, almost threefold, right, in 4.8 months. That move has to consolidate. Yeah. And it's taken 18 months to do so. And I really think that we have a really good shot of a bottom, of a significant bottom being created here. We need to see certain technical levels breached. We need to see more volume coming in. This is only one day, but another tell, we were talking off mic before we started this interview, was that the GDX, the GDXJ, the SIL, and the SILJ all printed a very bullish technical pattern last week. They produced something called 3 white soldiers. It's 3 white candlesticks with no gaps that all closed at their daily highs. And that took place last week. We had some selling come in to begin this week, but now this
week
pattern it was very weak, and this pattern, it looks to be to start off maybe a strong move here for our sector.
Okay. And the other key number here, at least in my opinion, correct me if you disagree by all means, $30 silver.
Oh yeah, that's huge.
That's
But
like,
it needs to get past 25 first, and then 25 on a weekly closing basis, and then once we get over 28, I think that'll sustain the prices higher towards 30, towards 35. That's the next resistance after 30.
And my gut feel is if we get to that, we hit 25, that 30 is going to happen really
Silver
quick.
has really, really strong moves that come out of nowhere. And this one kind of came out of nowhere, and it could continue and leave a lot of people on the sidelines. And I've been saying, ever since, October of last year, either you're buying weakness now or you're chasing strength later. And you never want to chase strength in this sector, as far as the juniors are concerned. Buying weakness, but when you feel in your gut, my God, why am I buying this stock? Look at this chart; it's so ugly. Those are the gains I've made the most on. Those are the juniors I've made the most gains on in the past.
Yep. Hey, and all the resources. Look what's happened with uranium,
Nickel, lithium, copper,
everything.
zinc.
So, and natural gas is like, it's a bellwether now. Unfortunately, most people don't appreciate it, and the analysts never really think about it. It's so highly specialized, the trading, everything else. But nat gas is coming back up. We got cold weather, all these things. We get cold weather every year. It shouldn't matter, but yet nat gas is really, it's on the move. So uranium, what's happened there, and then Kazakhstan, upheaval there. It's like, hey, just take your pick, but do something, right? So
Yes.
Hey, make sure you go over to David's site, Junior Miner Junkie, that's JUNKY.com, and tell him Kerry sent you. And if you got a question for David, shoot us an email, kl@kerrylutz.com. And don't forget, get your free newsletter at the site. David, always a pleasure. Thanks for coming on.
Absolutely. Always a pleasure here too as well. And looking forward to speaking with you next time.
The Financial Survival Network. Now more than ever.